breaking. Let's quickly move on. We're getting some big breaking news on the economic front. Well, the GDP growth, the India's economic growth, in fact, has reportedly slowed down to 5% in April, June from 8% that was registered last year. This is referring to the agency, news agency, and that's also, in fact, quoting government data, which says that India's economic growth has slowed down to 5% in April, June from 8%. There is a fall that is, in fact, being registered from 8 to 5% in the GDP. And this is, in fact, the lowest growth that we have seen in the growth rate, perhaps we have seen in the last 5 years, pretty much below expectations. Well, remember, it is coming at a time where we've already seen big mega merger announcement as far as PSU banks are considered. Well, that big economic boost. But right now, what we're also breaking is the slowdown pattern as of now when we look at the current figures of the growth trajectory, where economic growth has registered a dip from last year's 8% to current 5% as per the PTI agency, and this is also, in fact, referring to the quarter one of the 2019-2020 financial year. We're going to get our reporter on this. A sharp decline that has been registered in the GDP. It stands at, it's pegged at 5% for this quarter, one of the 2019 financial year. It's a free fall of the GDP or the gross domestic GDP, and a free fall from last year's 8% to now 5%. That's the numbers that we are actually, in fact, showing you on your screens. We will, in fact, decode it for you. This, in fact, is unfortunately the worst in the last 5 years. The growth dropping from 8 to 5%. And now this is coming close on the heels of that mega announcement by the government. Remember, a while back, as far as the roadmap of the banking sector and the big mergers, the 4 big mergers in the PSU banking sector that the government just announced a while back. Finance Minister, in fact, held that presser. And now the GDP has registered a free fall from 8% last year to 5% now from last quarter. It's down 8% from last quarter, and Ishwara is joining us on phone line. Ishwara, well, as far as these numbers are considered, well, it shouldn't really augur well when it comes to the growth trajectory that we were looking at, but then GDP at 5% for the first quarter. Many would say that this is the worst that we've seen in the last 5 years. Are we expecting a government response on this to explain this?
Well, at this very point of time, this is the quarter one GDP data, and it has come down to 5% versus 5.8%. So this is something which is being looked into, but at the same point of time, government is aware that yes, GDP growth rate which has fallen is rather not only localized to India, but it's because of certain international factors because of which this is happening, and this is something which is being looked into. And if you further divide, the quarter one GDA is at 4.9 versus 5.7%, which is quarter to quarter. And then farm sector growth has basically come to 2%, which is minus 0.1% quarter to quarter. Construction sector has basically come down to 5.7% versus 7.1%. Manufacturing output is at 0.6. Versus 3.5%.
Okay, Ishwara, stay with us. We have Akash Jindal, market expert, joining us on phone. And Ishwara, I request you to stay with us because this could have a political ramifications also. Mr. Bindal, thank you very much for talking to Republic TV. What factors would you really attribute to, especially when we look at the numbers, the fall that we are talking about, the decline that we are talking about, and also the timings of it, coming minutes after that big mega bank merger announcement by the government? Mr. Bindal.
Yeah, firstly, let me clarify 2 things. My name,
Mr. Jindal,
is Akash Jindal, and I am an economist. Now,
yes,
what
Akash Jindal.
These are Akash Jindal, economist. These are days of global recession. Globally, economy is in a very, very bad shape. Let me share some data. Global GDP growth of the entire world is expected nearly 2.6%. And there's a US-China trade war which has been going on for 2 years, which is impacting the entire globe. So in these days of global recession, global doom, India has to suffer a bit because we are a part of globalized economy. Let me share some more data with you. Economies like Germany, France, of them are having a very, very lesser GDP growth. Singapore, Hong Kong. So in these days of global recession, when businesses are globalized, economies are globalized, we are also a part of global environment. We are having FDI, which is now reduced because of global issues. FII money is also, we are not getting that sort of money. So that's also some amount of impact had to be there on Indian economy. So Indian economy can't be insulated, can't be separated from the rest of the world. So some amount of weak data was something which was expected, but still, I would say our government is taking measures. Our government for the past 10 days as an economist I have observed is taking measures on a regular basis, whether it's liquidity infusion into the banks, whether it's procedure changes for income tax, GST, whether more permission for FDI, now the banks merger. So at least the message to the businessman, to the trader, to the shopkeeper, every constituent of the economy is that yes, here the government is listening. The government.
So you're saying that more than domestic factors, the international scenario could be a big contributor when it comes to the sharp decline. Mr. Jindal, many thanks. Really appreciate you joining us, sir. And in fact, we also have Gurucharan Das, senior economist, joining us on phone line. Would you first of all agree with Akash Jindal? I'm sure you heard his point of view. And how do you explain this sharp drop and the timings of it?
Well, the drop was expected. The drop was expected, only it's worse than what was expected. Most people projected between 5.5 and 5.7 or 5.3 and 5.7. Anyway, I don't agree with Mr. Jindal completely, because I think a lot of this is India's economy is not as globalized as it should be. In fact, that's one of the problems with our economy, that we have not been an successful exporting nation, and we have not enjoyed the benefit of the global trade as much as we should have. Nevertheless, the fact is that a lot of the reasons are domestic, and we should not blame the global market for the slowdown in India's thing. The reality is that the growth has been slowing down for last four quarters in a row. And we knew the signals over a year ago. And you know for example, the automobile sector has been growing has been in trouble for almost 12 months. So a lot of the good things that Nirmala Sitharaman announced and Piyush Goyal announced a few days ago, these are all good things. And a lot of them have to do with improving the regulatory environment, and that I think is could have happened a year ago, or could have happened much earlier. That we didn't have to wait till now. And so surely with this government now in power, they should be doing the reforms aggressively. They should be putting money in the hands of the consumer, and that you can do by spending aggressively on infrastructure. And where you don't have, the fisc is in reasonable trouble, so they don't have a lot of money to play around with. But whatever get more money by privatizing more rapidly. Spend the RBI, which has given some money, that should be immediately put into infrastructure to complete uncompleted projects. So the important thing right now is to put money into the hands of the people, so demand can be created, so they will buy. Then investors, the manufacturers will invest in a factory, and then that will get the virtuous circle going.
So are you saying that this is a temporary... So, very briefly, quickly, 10 seconds. Okay. So this could be a temporary situation, and Gurucharan Das telling us that pretty much not really because of the global economic slowdown. This could be also some domestic factors, but the overall growth trajectory is what should continue. Really, thank you, sir, Gurucharan Das, senior economist, for putting this in perspective. And with that, we take a very short breather. We take a break. We'll be back with more. Stay with us.